Let's bring in Wells Fargo senior economist Mark Vitner for his thoughts on all of this. Mark, you watched Jerome Powell today. What was your impression, and what did you think about what he had to say?
Well, yeah, I really liked his delivery. I thought that he was very confident, very smooth, that he handled the questions incredibly well. It looked like he'd been doing it for a while. In terms of the rate decision, there was no surprise there. But one of the things that we put out in our note was that it's interesting that they downgraded their assessment of current economic conditions, or the first quarter economic growth.
Yeah.
And went ahead and raised rates. Earlier on in the recovery, they would have never have done that. There were several times where the Fed was primed to raise rates, and by golly, the numbers just came in a little bit too soft. Maybe we need to hold off. I think they are much more resolute, and I sensed that when I saw Powell in the press conference. It seemed like, even though we've gotten some softer numbers, we feel very confident, given the strength of employment, the strength of the survey data, that we actually raised our forecast for GDP growth in 2018 and 2019. So even though the data's come in softer, they raised their forecast, and then they added another dot. So they're looking for 3 rate hikes in 2019,
right,
and almost 4 rate hikes in 2018.
Yeah, I mean, it was very bullish, a lot of confidence in the underlying economy. I thought it was interesting. We had a guest mention this. If you look at the yield on the 10-year, it was at 2.9, 2.91. It's now at 2.89. It's been completely non-reactive to the Fed saying, yeah, we are raising rates. I find that hard to believe.
I'm a little surprised by that, too. And we put in there, I mean, the message to the financial markets: believe the dots. Trust the dots. They mean what they're saying. They are more resolute about raising interest rates today than any other time since we went into the great financial mess.
Indeed. We talked about trade. He said that he doesn't see an impact to the economic outlook. However, he did admit that there was a concern among some Fed members that this could become a concern if we do get into a trade war, which makes sense to me.
Yeah, I've never really seen one of those trade wars, but we hear an awful lot of talk about it. My sense is that we're going to see a lot of heated rhetoric, and at times maybe it'll seem a little too cross, and that the political risk may go up. But I don't see any damage to the global economy. I don't think it's in anyone's interest. And you look at a lot of the countries that are involved here. Most are more dependent upon trade than the United States is. Exports make up a relatively small part of U.S. GDP. They make up an awfully large part of Chinese GDP, an awfully large part of German GDP, and really EU GDP in general. So I think there's an awful lot of incentive for cooler heads to prevail there, and I think that's what's going to ultimately happen.
It's interesting, and as an economist, Mark, 3.6% unemployment. They have that down for next year and the year after that. I mean, that's remarkably low, which to me would suggest wage growth. I mean, there's not that much slack left in the labor sector, is there?
I really wonder at times. I don't think that the 3.6% unemployment rate that they have projected is the same 3.6% unemployment rate that we got 40 or 50 years ago, because we do have a lot more people that are outside the labor force. But you have to wonder, are they employable? I mean, with the opioid crisis, how many of those folks are unemployable or off the books? And certainly you see it. I travel around quite a bit, and you go to hotels, and lately the rage is all that you check in with your phone. You don't even have to go into the front desk.
Right.
You don't have to check out. You just kind of go in and go right to your room, and you're in there if everything works okay.
Yes.
If it doesn't, you're up the creek.
Automation is taking over, that's for sure. Mark Vitner, great stuff as always, Mark. Really appreciate your time this afternoon.